Welcome back to another video, everyone. In this video, we are going to talk about chart phases. I'm going to cover what are chart phases, different types of chart phases, and examples of all the chart phases that we will be covering. Now, what are chart phases? Now, when you guys look at stock prices, at times they may appear random. But what you have to understand is on a stock chart, there are certain phases that happen that allow you to understand the story between bulls and bears. And you understanding the story between bulls and bears is going to give you the highest probability trade setup. So for example, when you look at a stock chart, this is what you may see at times, or at times you may see something like that. Looking at this, it looks like, oh man, it looks very random. I don't know what's going on. It looks very confusing. But there are certain phases in here which I'm going to break down. And knowing what phase we are in will make it very easy for you to take on high probability trades. So the question is, what are the four chart phases? So the four chart phases that we have, number one is called trends. Number two is retracements. Number three is consolidations. And number four are breakouts and breakdowns. So let's break these four down. Number one, trends. I broke down trends in the previous lesson, but let's break it down once again just to refresh. Trends. A stock is always trending, meaning it's going in a certain direction. There's either an uptrend, stock is either going in an uptrend, right? It's either going in a sideways trend, or it's either going on a downtrend. This is one of the chart phases, right? Now, the direction the stock is in can change. So remember, with trends, if a stock is going in an uptrend, it's not always going to go in an uptrend. That uptrend can change to a sideways trend, or it can change to a downtrend. So the three trends we have, once again, are uptrends, sideways trends, and we have downtrends. These are the three trends we have. Now, besides trends, besides knowing the direction the stock is in and understanding that, the second chart phase we have is something called retracements. So what are retracements? Retracements are short price movements against the direction of a trend. So in this situation, stock is going in an uptrend. We see a retracement. We see this. This is called a retracement. This is called a pullback, right? Now, during an uptrend, retracements are short-term phases in which the price falls. So in this situation, stock is going up, it goes down. As it goes down, this is not a place to panic. This is normal. This is healthy. This is known as a retracement. This is something we want to see, especially if a stock is going up, like the way this is. During a downtrend, retracements are short-term phases in which the price increases. So basically, if a stock goes on a downtrend, this is what a retracement would look. And then usually if it's a retracement, the stock continues the move down. So far, we are in an uptrend. Stock retraces, takes a break, and then continues. Retracements are also known as pullbacks. So if you heard the word pullback, this is what a retracement is also known as. Stock goes up, pulls back, retraces, takes a break. All technically mean the same thing. Now, there's something I want you to really understand. There is a difference between retracements and something called reversals. A lot of people get this confused. There is, once again, a difference between retracements and there's a difference between reversals. This right here is a retracement. Stock goes up, takes a break, right? Goes up, takes a break. Goes up, takes a break. These are retracements. Goes up, takes a break. This right here is not a retracement. This is a sell-off. This is a reversal. The uptrend that you guys see here is now reversing, and now it's becoming a downtrend. And now in this downtrend, if you guys look right here, this downtrend now has a retracement. See how it makes a huge move down? Takes a break, retracement, continuation down. Same idea. Once again, let's refresh. Stock is on an uptrend. As it's on an uptrend, it's going to go up, take a break, go up, take a break, go up, take a break. These breaks here are known as retracements. Right here, the uptrend finishes. It ends. As the uptrend ends, we are now in a downtrend. Now, during the downtrend, when you see a huge sell-off, you might see that the stock starts going up. This is known as a retracement, especially when a stock is on its way down. And then you can see it continues the sell-off, it continues the reversal, it continues the downtrend. So make sure you understand the difference of retracements and reversals, because a lot of people see reversals and they think, oh, it's a retracement, it's a retracement. No, it's not a retracement. There's a difference. Next, we have something called consolidations. This is a sideways phase where the stock takes a break. During an uptrend, consolidations are short-term phases in which the stock takes a break before it continues to move up, right? Stock goes up, it takes a break. It goes up, it takes a break. It goes up, it takes a break. Now, what I want you to understand is that the stock will not always continue to move up. Keep that in mind. Just because a stock goes up and consolidates does not mean it's always going to go up. We will assume it's going to go up if it breaks that point. We will assume this is going to go up if it breaks that point. We will assume this is going to go up if it breaks that point. So very important to understand that. During a downtrend, consolidations are short-term phases in which the stock takes a break before it continues to move down. So if the stock goes down, it will look something like this, right? It'll look something like this. Remember, it will not always continue to move down. It will only move down if it breaks that level. If it breaks that level. If not, it will not continue to move down. You can see stock is on an uptrend. As the stock is on an uptrend, it consolidates, continues the uptrend, consolidates, and continues the uptrend once again. Which leads us to our final phase, known as breakouts and breakdowns. So, very, very important phase. This is where the buyers and sellers are neutral. Buyers and sellers are neutral during the during this phase, right? During the consolidation phase, that's where it starts. Or a sideways trend. So this starts off as a consolidation phase or a sideways phase, right? So in this phase, buyers and sellers are neutral. No one is in control. Right now, no one is in control, right? Then what tends to happen is the buyers or the sellers take control and there's a breakout or breakdown. So for example, in this situation, we see a breakdown. Who takes control? Sellers are more aggressive, right? If you look right here, sellers are more aggressive. How do we know they're aggressive? Look at volume. Volume is spiking up. Huge red candles showcasing a strong sell-off. Sellers are more in control here. Buyers would be more in control if the opposite happened. If this was able to break out of this level with increased volume, buyers would be more aggressive. Now, when the buyers become more aggressive around the critical level, we see a breakout. So if the buyers were more aggressive here, we would see a breakout. When the sellers become more aggressive around the critical level, remember critical level known as support, we see a breakdown. You can see a breakdown. How do we know this is a strong breakdown once again? Strong and high volume, confirming a strong breakdown, a strong sell-off. Bears are in complete control, right? Understanding this phase is very important once again. You know buyers are stepping in here, buyers step in, known as support levels, support levels, support levels. And then finally, when buyers are unable to keep stepping in, sellers take control and the stock price dumps, which is known as a breakdown. Now let's break some examples down. Right here, we have an uptrend. You can see we're looking at stock Shopify. Stock Shopify is on a nice, healthy uptrend. Nice, healthy uptrend. Nice, healthy uptrend. What happens right here? Has a hard time breaking that point. And then finally breaks out. When it breaks out, right now, what is Stock Shop doing at this current moment? Stock Shop at this current moment is consolidating. It is in a consolidation phase. It is taking a break. Look at this. It's been trending. It's been on an uptrend. As it's been on an uptrend, Stock Shop is now taking a break. It is consolidating. It's in a consolidation phase. When would we enter this trade? We have two ways to enter. Number one, if the stock breaks that 210 area, we can look to be buyers. Or if the stock breaks the 191 level, we could look to possibly short if other criteria line up. This is obviously not the only criteria we're going to look at, but since we're just focused on this for now, this is what we will pay attention to as of now. But as we cover more and more topics and add more pieces, there's other things we need to factor in as well. Now, if you look at the same stock, you can see uptrend, consolidation, and then look what happens right here. Boom, breakout. Uptrend, stock takes a break, consolidation, consolidation, boom, breakout. Takes a small break, boom, continuation. That is a stock breaking out from a consolidation phase. You can see once again, goes on a nice uptrend, takes a break, and boom, continues the move up. Let's break this chart down. Look at Snap. Snap is on an uptrend. Snap goes on a nice uptrend. Nothing really crazy. Goes on a nice uptrend. You can see there's a gap right there. Why did it gap up? Earnings, right? Earnings happen. Stock gaps up. As it's gapping up, you can see goes right into our resistance point of 1050. That's our critical level. It starts taking a break. What happens after the break? Stock now gaps up. After it gaps up, it is basically breaking out. It breaks out of that level. You can look, high volume, confirming a strong breakout. Beyond that, you can see a consolidation period. We are now consolidating. So stock starts on an uptrend, consolidates, breaks out on high volume, and now it starts consolidating. It starts taking a break between our support and our resistance level. As we keep progressing, look what happens again. Breakout. Look at that breakout. Strong volume, right? There's strong high volume right there. As a strong high volume, that's confirming this move alongside with a strong green candle showcasing that bulls are in complete control. Stock breaks out, takes a break, continues to break, gets rejected, and then you can see breakout again. Over and over and over again. Very healthy moves right here. Being able to read this itself is extremely, extremely important. Once again, uptrend, takes a break, consolidates, breaks out, consolidation period for a very long time. Breakout, consolidates, breakouts, consolidates, boom, breakout again. Right? Very important to understand these periods. Let's break down Roku's daily chart. So right here, we're looking at Roku's chart, 1 year, 1 day. Let's break everything down. So you can see Roku has earnings. Because of earnings, Roku gaps up. Huge gap play up. Stock goes right into this 140 mark, gets rejected and pulls back to about 120s, 130s. That's a retracement. It retraces, it pulls back. Healthy pullback, that's good. Why? Because look at this. Stock went from $100 to about $140 in about 4 days. So in 4 days, the stock moved about 40%, right? So if a stock moves up 40% in 4 days, that's a lot. That's a big move. You want to see a retracement. At this point, I want to see this. This is something that we want to see. We want to see a retracement. Why? Because it made a huge move up. It needs to take a break. It needs a pullback. It pulls back, and then it continues. That's very healthy. That is beautiful. That's beyond beautiful. That's the things that we want to see. That's what makes up a great, phenomenal chart. What happens right here? Breaks out of that level that the stock first got rejected from. See, it got rejected. And then what happens right there? It breaks out, continues the uptrend. And then what happens now? Stock is having a huge retracement. This is kind of scary. This is kind of a scary retracement, right? This happened because of news. There's news out that's causing this. But now what you have to understand is as it's retracing, it comes to a consolidation period. Look where it retraces to. Stock breaks out, retraces to the same level it had a hard time breaking, same level that it broke out from. So this is known as support and it's consolidating. Now, if Roku can hold this level and it can continue and buyers step in and there's volume, good. That was a strong retracement. But if Roku cannot hold this level as of now, and let's say the next day comes and it pushes below that 140 mark, you see volume pick up, that now is a sell-off. That now is a reversal. That is not a retracement. Retracement is out of the window. As of right now, it's a retracement. But if it breaks below that point and continues going down and you see volume on that break, that is a reversal. That's when I would maybe short. But if it can hold this level and show me signs of going up, or volume kicks in, strong green candle, I would possibly be a buyer. But as of right now, I'm just watching this level and seeing what happens. But once again, if it breaks that point, not a retracement, that is now a sell-off, that is now a reversal. And then obviously applying our levels of support and resistance, this would be the next point I would ultimately care about. And then if it breaks that level, most likely keep going down and down. Let's break this chart down. We have a nice healthy uptrend from stock AMD. You guys see, nice healthy uptrend, right? Nice healthy uptrend. Consolidation phase right after the uptrend. Stock goes in an uptrend, consolidates, takes a nice break. Totally fine. You have to understand, this stock at this point was around 10. It went to 17. So it moved up about 70%, right, in about 2-3 months. 70% in 2-3 months is taking a break, which is pretty healthy. That's what we want to see, right? After the break, boom, breaks out. Strong volume. Why did it break out? Earnings. Now, was that a strong breakout? Yes, that was a phenomenal breakout. Now, if you combine what we've learned so far, that is a gap, right? That gap is breaking above our resistance point, which is extremely strong. That's an extremely, extremely strong gap, right? Strong volume, gapped up because of good earnings, breaks our resistance point and goes right above it. After that, what tends to happen? Consolidates once again. Stock makes a huge move up, consolidates, 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 consolidates. As it consolidates, boom. What happens once again? Breakout. Strong breakout? Absolutely strong breakout. Why? Look at the volume. Very high volume, showcasing bulls are in complete control. Just look at that move. Look at the candles. Gapping up while the stock is going up. That's a strong gap up. Remember the gaps we learned? When the stock is trending and it gaps up, that's very, very strong gaps, right? What happens? Uptrend continuation. The uptrend continues. Boom. Retracement. Goes up, takes a break, goes up, boom, retracement. Healthy. We want to see that. Why? Because the stock broke out from 20s, went to $30, right? So the stock moved up a little over 30%. No, what am I saying? It moved up a little over 50%, right? Stock moved up about 50% from $20 to $30. Moved up 10 points. Moved up about 50% in a very short period of time, in about a month. So it needs to have a retracement. Goes up, takes a retracement. And then look what happens right after the retracement. Boom, breakout again. Strong move again. Volume is there again. Strong move. Consolidation period. Stock takes a break. Breakdown. It breaks that area, right? That critical level. Now you see how things are coming together, how support, resistance, trends, all that's coming together. On a healthy uptrend, uptrend gets broken. There's a breakdown at a critical level. Boom, stock starts selling off. What happens right here? We now see a retracement. Sell off, retracement, boom, continuation. So understanding this and practicing is very, very, very important. Now we're going to go over Tesla's intraday chart. This is a 5-minute chart. So each candle represents 5 minutes for stock Tesla. We can see an uptrend. Consolidation, stock takes a break. Now an uptrend here is going to be a little bit different than a daily chart. This is still a solid uptrend. It makes a 4-point move up. So strong move up, strong uptrend. Takes a break. Now after it takes the break, look what happens. Boom, breakout. Volume is present. Retracement, pulls back. Stock moves up, takes a break. Healthy, we want to see that. These are things we want to see. Boom, breakout again. And you can see on the breakout, the volume kicks in, right? You can see on the breakout, the volume kicks in. Stock goes up, gets rejected. Boom, pulls back again, retracement. After that retracement, boom, another breakout. And you can look at all the breakouts. What happened? Volume is picking up. Strong moves, right? Volume is picking up. Strong moves, right? Even here, volume is picking up. Strong move. I don't care about volume anywhere else. I care about volume here. I care about volume here. I care about volume here. I want to see volume there. I want to see these strong moves up. I want to see these areas. And then now, what phase are we in? We are now in a consolidation period. It's consolidating. Now, if it can break that 249, 250 mark, all right, it may continue. But right now, it's consolidating. If it breaks 245, I'd be kind of worried. Now, just to recap, understanding what phase you are on a chart is very important. It always starts off with the trend, and then all the other phases follow. Identifying phases and identifying what phase we are in at the moment is one of the most important things you can do on diving into a stock chart and breaking down its core elements.